You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here. Exciting times. A lot of stuff going on.
What is going on the stock markets as we speak?
Well, we had a big winner today. American Eagle Outfitters, ticker symbol AEO, was up about 40%. This is the little company that, produces clothing, retail outlets, and they had this gal, Sydney Sweeney, this young girl parading around in these jeans that apparently got the left versus the right politically. The left upset that this young white girl was wearing these beautifully hot jeans, and they made a big deal about it. In any event, the jeans are selling like crazy. It's a cute young girl, and again, named is Sydney Sweeney, and they're selling like hotcakes. So anyway, the little stock we got in. Actually, we got in just when the Sydney Sweeney story hit. It was about, I would say within the last 30 days, and it was only around $12 a share, or 11, maybe it was $10. Anyway, got up to about 18 3/4 today. So you're just playing the technical picture with a hot story and looking at the charts, and we just knew it was going to continue. So what happened was, I think last night the company came out with some earnings forecasts or discussion about how these jeans are selling like crazy, and they have to recalculate their earnings forecasts and so forth. So we had a nice day. So we, for traders, we recommend taking a profit when that happens. So I'm not telling anyone to buy it here, but when it was 10, 11, $12, it looked like a trade, and when it gets up toward 19, that's a nice little trade. Listen, maybe it's a $50 stock down the road. Maybe it's another Lululemon or something. I don't know, but it was sort of fun because the whole story was fun. It's a fun story. If you watch the videos of this young girl walking around parading her jeans, and she's got a nice little figure, and she's a young, beautiful young girl, and being a male, I enjoyed watching that. So it was sort of funny, cute, and profitable by the same breath.
So my accurate headline for our story will be American Eagle shares busting out.
Yeah, that's a good one. But I would encourage anyone buying it here. I'm just saying it was fun. It was a fun story. It's like,
well, you couldn't buy publicity that ad campaign. I think I get my blonde hair and blue eyes from my jeans, but spelt like blue jeans.
Right.
And people said it was some kind of a racist deal.
I just thought it was really cute watching little ads on the internet. You can pull up some of the ads of her showing the jeans, and it just sort of caught on for some crazy reason. Just think about how many jeans have been sold by various companies over the years with different models and personalities, and how this gal said
well, it was Brooke Shields and her Calvin Kleins or something, wasn't it? Back in the 70s?
Right. So it's always something, but it's sort of fun. It combines money and sex and everything in one place. It's sort of fun just watching the action, watching the commentary, and if you can profit from it, playing a stock related to it. There's always some story tied to, these various events like that. So it just was fun. I just enjoyed being in it because of the story, and I knew it was going to go up, both looking at the charts and the fact that it was, such a cultural event, and it was in the news all the time. So I figured it would ultimately translate into higher stock prices. So we can talk forever about all the fads in various companies and stocks and, how they responded to stories and stuff. But ultimately, it's the consumer. I mean, they were buying jeans, and they're pulling it off the shelves and can't keep enough of them in stock. And, ultimately, that's what drives business. So, it wasn't just a story; it was a real, real economic event. So anyway, sort of fun. You talk about a lot of things on the show and what's going on, but it's nice to have a fun story like this and also make some money doing it.
It almost proves that Hollywood adage, there is no such thing as bad publicity.
That's right.
Because I remember, I don't know, so many stories where people go, oh, well, this guy is famous. I said, do you know why he's famous? No. People don't know the background story. They just know the person is famous.
Right. As long as it drives the objective, selling the product and making the film successful. No question about it. That's what it is.
Yeah. When you put pictures from that ad campaign on all the national news, I went, those spots can cost millions of dollars, and American Eagle didn't have to spend a penny.
The publicity was worth zillions of dollars, no question about it. They couldn't have spent the money, or wouldn't have had the money to create the publicity that came out of this crazy little story. And it was the, I hate to use the word corrupt left press. We have the main press that runs our news media, who I'm very much critic of. They took an attack approach, which was totally unwarranted, against this girl, claiming, racist or all kinds of ridiculous opinions regarding the white girl wearing some sexy jeans.
And then they had to show pictures from it.
I mean, if you read the commentary, it shows you, I hate to use the expression, but it comes to Michael Savage's great book, Liberalism is a Mental Disorder, from about 10, 12 years ago. I mean, it's just mentally ill people attacking a pair of jeans on a young girl, but that created unbelievable publicity and sales. So it backfired on the liberal left, or the, I say the corrupt media that was extorting those viewpoints or supporting those. Anyway, we made money. That's all that matters. That's what the show's about.
What's going on with gold right now?
Well, it went to new all-time highs, as you know, well over 3,500, approaching the 3,600 level, not quite getting there. It's a stretch. It's getting up there. The shares were doing a lot better than the metal for a while. Then the metal suddenly popped up here. Everything is extended. If you're looking at the charts, they're a little extended. I mean, they're getting a little exuberant here. Silver got over $40, got up to $41. Everybody got excited about that, but it seemed to have been inevitable anyway. So the trend is your friend until it's not. It depends what your viewpoint is. If you're a trader or you're an investor, if you're an investor, you've probably been in it for years and you care less, and these comments are relative. As a trader, I see some of these stocks, ETFs, and they're like, way extended, and they're probably sales for a trade to try to buy back on a pullback. So depends what your perspective is. But the trend is up. There's a shortage, apparently, of gold. We talked about the Fort Knox potential fiasco before on these broadcasts, so whether the gold's really there or not, and the leasing of the gold, and being leased many times over and over, and the accountability of what's really there in Fort Knox or not. So, and then you got the Chinese and everybody else. Russians have been accumulating gold. So, ultimately, still we have a huge national debt. The world, the European Union has as well. So, ultimately it's a great store of value. But, I could have had the same discussion with you 24 years ago when gold was in a bottom of $200 before it took off. It had been $800 a few years before that, got to $200 in 2000, and since 2000 goes from $200 to $3,600. So the same factors have existed then as now, but you had to be awfully patient. And if you were, trying to make a living day to day with it, it would have been difficult if that was what you were counting on to, pay your bills. So if you just held, you did great. But to answer your question, it's been around thousands of years. It's going to continue to be, and there's so much going on now with the potential tie-in with gold into the treasuries, and the tie-in potentially with that into crypto, and the state of the debt, which is still extraordinary around the world, and the BRIC nations, ganging up against the U.S., and I guess you just got to sit put because I think we're in this cycle. It was a 20-year cycle that pretty much lasted from 2000 to 2020, and then another version of the cycle carries us to about 2030 or 2032. You look at some of the long-term cycles in gold. So we might have another 5 to 7 years on this most current leg of the cycle before you see some super blow-off top, like we saw back in 2011. When it topped out back then, and got everybody excited, and that was your your big peak, and then we went through this 10, 12-year corrective period. So my gut feeling is you got a few more years, but going to trade around a little bit, I'm sure, in the interim.
What's going on with Bitcoin?
It caught a cold the last couple 3 weeks. Got up to 123,000. Got down to I'm looking at the chart. I think it got down to about 107,000, 108, and we had this same discussion a few months ago. If you remember, Bitcoin got over 100,000, and I was saying, gee, it could pull back into the 70s, which was a corrective number. I think I was looking for 73,000. It got to 77 or 78, and then it took off again. So you had roughly like a $25,000 correction in it. And I think that's what we've been experiencing here, from 23,000, back to 1,000, just to give you a rough, use of numbers here. So, I don't want to say it swings in 25,000 increments, but that seems to be the kind of volatility that it has. So I just think you're going through or have gone through this little corrective phase in it. And, you got to be prepared for that when you're talking Bitcoin. At the same time, Ethereum had done a little bit better. It pulled back here a little bit, but it's closer to its highs, I think, than Bitcoin is at the moment, and most of the other cryptos have pulled back as well. So it's just the normal, ups and downs in the crypto market within an overall strong uptrend, which I still think is the case. So let's see how it plays out here. I think, from all the reading that I do and the sense that I get talking to other experts in the crypto market, we should see a strong move, into the end of the year. That's, not so much in my opinion, it's that of others. I just sort of watch the short-term charts in it. But we do have the blockchain letter, and we do have a core position in many of the ETFs related to crypto, including Bitcoin and others. And with all the government sponsorship for it, we've talked about this, the U.S. government behind it now with the crypto reserve and the Bitcoin reserve and so forth. The trend is your friend there, at least for the short term. So, maybe if we get a big blow off here, between now and year end or early next year, and gets way overdone, then we may go into a several month corrective period. So let's see how high we get. The benchmark target, I think a lot of the analysts are looking at is around that 140. In terms of, because I'm talking about Bitcoin now, there's so many cryptos out there, but Bitcoin around 140,000 or so seems to be a good target number that many are looking for. And listen, it could go a lot stronger than that. I know one famous analyst, I don't want to mention his name, on CNBC was, back in January, was talking about 250,000 for Bitcoin this year as a potential target. So a lot's going to have to happen between now and December to hit that 250,000 level that was talked about, 9 months ago. But the potential is there. It depends on how many eager buyers are out there, and also there's more of an institutional involvement now, Jim, in the Bitcoin market. It's become more of a commodity now. It was for many years just considered a pure speculation, but you got ETFs that trade it. And again, we're just focusing on Bitcoin now because there's so many other opportunities out there besides the Bitcoin. But, BlackRock, the largest money management firm in the world, created the ETF for Bitcoin last March. And you got an allocation of institutions into Bitcoin. So it's becoming more of a stable type situation. So the only risk out there, and I think we mentioned it 2 or 3 times in previous broadcasts, is that if and when, which is at the moment unlikely, but if and when some advanced programming is able to crack the code on Bitcoin, and this doesn't mean it would affect others, just Bitcoin itself, that maybe could hurt Bitcoin itself at some point. If the coding is made public and it's figured out, apparently, from what I understand, that could destroy the Bitcoin market. They could break it open and then it would fall apart, I suppose, if and when that coding was ever revealed. And that's a big assumption on my part that that would even happen. But with all the quantum computing out there and advanced power and research, that question was raised, that what if that happened? So it's something like anything else, you don't want to put all your eggs in any one basket. So if you're going to be in the crypto market, you shouldn't only be in Bitcoin, that's for sure.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, anything happening on the crude oil market?
Yeah, it's coming down a little bit. We're short via a reverse ETF, ticker symbol SCO. We've been playing it on and off for months, actually since last November when Donald Trump got in. I'm still of the view that crude oil can get down to about $47 a barrel. So the big low has been 55, and we'll see if we're right by the end of the year or early next year. So I'm sort of on the bear side on crude oil, which is very bullish for the stock market, by the way. So as you know, higher crude oil prices is a tax on consumers. So let's hope that crude oil continues weak.
Anything happening with uranium?
Uranium has been strong. It's been coming back. Uranium stocks like Cameco have been very strong. If you follow all the uranium-related plays, they trade around but are closer to their highs. And the big push into nuclear, the big stocks like Constellation Energy and so forth, GE Vernova, which makes reactors. The whole uranium nuclear group is still, I'm not saying that every stock in that group is at the high today, but they're pretty close, to it. So that's where the money is. The question is, are we overly investing in something that may take still time until we really see the results? It takes time to get these reactors built, get them implemented, and most of the push, fortunately or unfortunately, came from the demand for AI computing and the demand on the parts of big companies like Microsoft for computing power and needing the energy to do that. And nuclear, they turned to nuclear. But unfortunately, the lead time to get this up and running is not something that happens overnight. So it'll be a couple of years until all these until nuclear reactors that the big companies are counting on are up and running. Many companies are relying on natural gas and other alternatives, but still okay. If the stock market suddenly turns into a big bear market at some point, the market's not going to go up forever. Though I am bullish, for the time being. I suppose everything could come down. Even gold. They say they throw the baby out with the bathwater. When you get big corrections in the market, which is inevitable. My gut feeling is probably next year, but we'll see what happens. We'll take it a day at a time. So whether it's uranium, whether it's gold, all markets tend to suffer because of liquidity issues that come up when markets start to come down. But to answer your question about uranium, it's still still positive and still in good shape. Really, the big story that traders are worrying about, and I guess they'll be dealing with this tomorrow morning, is the Bureau of Labor Statistics report, which is supposed to come out tomorrow morning at 8:30 Eastern Time. So everybody's holding their breath for this. I don't know which way it's going to go. I'm in the camp that refers to the BLS as the Bureau of Lying Statistics, not labor statistics, because of all the controversy over the years and the calculation and the recalculation of the results. Basically, the concern that the reports are inaccurate because it's a survey-based report. There's been declining response rates, the routine use of initial estimates that are later revised, sometimes dramatically. So the credibility of this report that everybody's holding their breath, and I really didn't speak to it, but the reason everybody's holding their breath is obviously if it's a bad report and it shows jobs have not been improving and going the other way, that gives the Federal Reserve supposedly ammunition to lower rates here in September, the third week of September. And the predominant view is the Fed's going to lower a quarter point. But some are speculating that if this report tomorrow morning, this jobs report is bad enough that would even give the Fed ammunition to do a half-point cut in interest rates. You know how I feel about the interest rates. It's just one piece of a big puzzle, but it's psychologically everybody's hanging their hat on it. So we'll see what happens, 8:30 Eastern Friday morning, and what kind of report comes out and how the market responds. But if it responds favorably to the market could be explosive. And those that have been worrying about a big correction in September, which historically the worst month of the year, I have egg on their face if the report comes in such a manner that would encourage the Fed. The Fed, of course, wouldn't react tomorrow, but it would give the probabilities in the favor of a much larger rate cut. So, it should be interesting. If it goes the other way, then the market has a big sell-off. So September 5th, a big day in the market because everybody's sort of counting on this one report, which I think is, extreme, but we'll see.
Anything happening with the cannabis market?
Yeah, it's cooled off since our last conversation. You had a big run here for 3 weeks on the story that Donald Trump was trying to encourage the rescheduling of cannabis from level 1 down to level 3. So the stocks are still way off their lows, but have, also pulled back off their highs. And you have to, keep your head screwed on about this because the rescheduling of cannabis from 1 to 3 is not necessarily super bullish for cannabis. It's positive because we've been waiting for it for years, but we still have the Banking Act issues. It doesn't make cannabis legal in the United States. It just says the DEA has rescheduled it to a lesser serious substance, but it's still considered illegal. So the U.S. Congress is going to have to legalize it the way Canada did this, years ago. So it's a plus, but it's not the full solution. So what I'm saying is the stocks already had some big moves, and if the rescheduling doesn't occur, as everybody's hoping, even though Trump has sort of pushed forward or made comments to that effect, and if the Banking Act and the legalization issue isn't solved, these darn things could cool off again. But they had a nice run. Tilray, which is the big Canadian name, TLRY, we were talking about in our newsletter, the stock was as high as, I'm trying to remember now, $250 a share after it went public in Canada a few years ago. And it got down to 35 cents in the last 6 months, believe it or not. But we were talking about it in our letter, in our cannabis letter, and in our regular newsletter. So it went from 35 cents to $1.50, which is a hell of a percentage gain if you were trading it. It was trading 30, 40 million shares a day, and it really took off on the Trump statement, but it was inching up prior to that. So Tilray, I mentioned that just as one example because there's a Canadian name that really, got into the doghouse, and of course, Canopy Growth, the other big Canadian name, also did as well. It didn't rally as much on this rally percentage-wise as Tilray did, but it's an interesting subject. I mean, the bottom line is whether it's cannabis, uranium, all these stocks have their ups and downs, and if you can watch the charts on them, they get to points that are way oversold, or way overbought, and present trading opportunities. So, we had Tilray on our list, among others, and, we saw that a bounce was likely, and we had no knowledge that any news was going to come out, but, the market sort of sees it coming, when you see a chart pattern and you see a chart price sort of bottoming and some buying comes in and it's sort of inching up a little bit from the left to the right side of the chart, you get a sense that something is coming or somebody knows something. So I guess that's what we saw in Tilray and some of these other names. But again, for us, they're trades. I mean, I don't think Tilray is going to go back to $250 a share by any stretch, because that was, I guess, what Alan Greenspan would call the irrational exuberance, right? So anyway, that's sort of the cannabis story. So that's sort of where we're at here tomorrow. The 5th is sort of a big deal for traders, and just stepping back a bit, the September-October time frame historically offers downside risks for the market. So one of the headlines I put in my newsletter is is the anticipation of a sell-off in September a bear trap, meaning that too many bears are expecting a bad September, but then it goes the other way, and today the market was strong, and we'll see if the news tomorrow sort of supports that. So if it isn't, then I guess the bears are going to be right, and we're going to get more of a September correction. But if they're wrong, you could see an upward explosion, and that would force a lot of shorts to cover their short positions, and the market could surge to new record highs in a time frame that nobody was expecting it to happen, which is sort of my gut feeling because too many bears out there. So we'll see. It's like anything else. We take trading positions, but I'm long the market because I think our targets are much higher between now and year end, and there's too much apprehension about the seasonality here, but we'll act accordingly if the numbers switch more dramatically. Meanwhile, for those who are looking to the heavens, we have what's known as a CIR, a co-rotating interaction region. This is a movement on the sun, basically, that could create a geomagnetic storm. So what they are these, I'm just sort of paraphrasing, they're transition zones between fast and slow streams of solar wind. So it's supposed to hit September 6th, which is, obviously Saturday. So we'll see if the solar the CIR, co-rotating interaction region on the sun, is going to have any impact on, creating shock waves here and the magnetic field on the Earth and so forth. Sort of fun stuff that I'm always talking about on these interviews and paying close attention to. And beyond that, of course, looking out, we're always looking out a little bit. You have the autumnal equinox coming up September 21st, 22nd. And, my theory is that sometimes you get change of directions. It's actually the 22nd, 23rd, which is the same time the Federal Reserve is supposed to be making a decision on interest rates. And for those who are looking to the moon up there's a full moon on September 7th. So that's coming up. That would be on Monday. So we'll see. Sometimes you get changed the direction around the full moon within a day or two. So maybe we're experiencing that now early. We'll see how that plays out. So there's little interesting tidbits I look to, and in terms of cycles and other things that are happening besides what you actually see on the tape in the market. So that's sort of a summary of the geocosmic for those who might have asked about it.
Mark, thank you so much for chatting with us.
Great to being here. Thank you, Jim.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. If you have any questions for Mark or for any of our guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.